Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, everyone. Welcome to another Wealth Coffee Chats. It's Tax Tuesday again. Now, apologies if Anthony, you were expecting Anthony to be lined up today. We had a short reshuffle, so he'll be on next week. So if you jumped on to have a listen about capital gains tax, he'll be on next week to chat about that. Hopefully you've got a brew ready to go. Don't despair. We've got another topic that causes much confusion for property investors, and that is, what is the difference between a repair and an improvement? So everyone, throw into the chat too. Keep it quite casual. Let us know where you're listening into from today. Now, this is one area where we see a significant amount of misunderstanding and frustration. Now, I completely understand this. You think it's pretty straightforward, pretty obvious to be a repair or an improvement, but I kind of liken it to trying to teach spelling. If you're in the queue to the ATO for an audit, the gnomes are going to want a receipt. There's silent letters everywhere, different sounds. It doesn't always make sense. And that's kind of a bit the same with repairs and improvements. So don't feel so bad. It can be confusing. Now, while we just have to accept that this is the case, there are some rules of thumb to kind of get you right most of the time. So we're going to have a look at some of the differences, some practical examples, and a bit of discussion on how the ATO manages these items in an audit. Morning, Courtney. Morning, Bunty. Hope you're all well. And Rosie as well. Thanks, Rosie, for jumping on. Okay, so let's first define these items. So repair is work done to restore an asset to its original condition. So this means or includes fixing defects, damage, or deterioration that occurs through, I guess, normal wear and tear on renting the property. Now, I'm going to emphasize while renting the property part, so we'll come back to that. So some basic examples of this would be replacing a broken window, fixing some storm damage to the roof, burst pipe in the plumbing, things like that. So I guess what you'd normally expect things to happen during a property ownership. Now, on the other hand, a property improvement is considered work that enhances the value or functionality or even lifespan of an asset. So these improvements go beyond a mere repair and often involve upgrading or adding new features. So a basic example might be adding a new room. So you're doing like a bit of a renovation or an extension, renovating a kitchen, bathroom, or maybe you're redoing the internal electricals and updating the lighting in the house as well. So from a tax perspective, why is this important? So feel free to throw into the chat some of the things that you've had, maybe, I guess, questionable. Maybe if they're repair and improvement, throw them in there. We can always have a look. But why should we care? We're paying for the repair or improvement. I mean, the money's coming out of our pocket. This is all true. However, if it is considered a repair, we get an immediate tax deduction in the year that the expense is incurred. So this means you get more tax back in that year. So in summer at the moment, I guess as an example, we're seeing more air conditioning repairs as units are being used more. Items like that, I guess, yeah, Courtney, fences being damaged in storms. Now, the reason I emphasised before about repairs as a result of damage or deterioration from being rented is because I guess, overwhelmingly, the number one mistake investors make is, I guess, misunderstanding this. And the scenario that I've got is you've purchased your new investment property. Now, before renting it out, you've got all these things and little items that you need to fix up to bring it up to scratch before it's rented out. And you're thinking, oh, yeah, perfect. In this first year, I'm going to get a heap of tax back. I've paid for all this stuff. I'm going to get a big refund. Now, don't shoot the messenger on this one, but you're going to be a little bit disappointed. You don't get to claim an immediate deduction for those. However, they're actually added to the cost base of the property for capital gains purposes. So to be clear, the actual definition of this is initial repairs, and it's quite broad, and it's pretty significant in the way that it works. And it's really any work done to fix defects, damage, or deterioration that existed at the time of purchase. So maybe not so relevant for those purchasing new properties, but it's definitely going to impact buyers who are purchasing existing properties, particularly those that are aging, I guess, and have got more items that they need to fix to bring up to a rentable, rentable sort of property to put on the market. So I guess we've defined repairs. Should be obvious then that everything else should be effectively considered an improvement. And these are split out into two groups. So structural improvements or capital items such as new hot water systems or air conditioning units. Now, I guess we should all be fairly overcross this with our depreciation schedule. So this is what we see on our schedules, either the capital works or the capital allowances. So where structural are depreciated at 2.5% a year, so over 40 years, and capital items are over their effective life. So have a look at your depreciation reports. They give you a pretty good indication of the types of items that are across both of these. And a quick reminder that you can only claim depreciation on new items. So if you're buying secondhand items like a secondhand oven or something like that, then there's no deduction available. So just something to keep in mind. All right, now let's run through a couple of practical examples. Alison, I'm having to gut an ensuite right now. Waterproofing failed. Oh, that's not good. Don't know if I'll do the same repair or upgrade to renovate yet. Yeah. Okay. So you've got, I guess, maybe a bit of time to work out which way it's going to go, Alison, if it's going to be an improvement or not. I guess we'll start out with the easy ones and then move to a progressively, I guess, more difficult or I guess more challenging to work out what's what. But if we look at a fence repair versus improvement, so if your rental property has a fence damaged in a storm, so this is pretty relevant, particularly for those in southeast Queensland at the moment, you might have had a couple of ColourBond panels that found their wings and took flight to another suburb, or a tree that's fallen over on it and squished part of it. So if you fix those damaged panels of the fence and restore it effectively back to its original condition, then that's considered a repair, and therefore you get an immediate deduction for it. If, however, you replace the entire fence with a new, I guess, high quality one, then that's considered an improvement. So you might have had a timber fence there and you've thought, oh, we're just going to upgrade it to a ColourBond, then that's going to be depreciated over its effective life. So that's fairly Easy, straightforward. Let us know. All right, so another example might be carpet. So this is one, I guess, that trips up a few people. Now, even if you've had an investment property for, let's say, 10 years, the carpet's going to get worn out by the tenants. Does someone want to tell me whether that's a repair or an improvement and how that's treated? You would normally think, because of wear and tear, that it's probably going to be a repair, and we should be able to claim a deduction in full. But unfortunately, no, not the case. Carpet's considered a fixture and fitting, so therefore it's depreciated. So similar, I guess, in that if you were to replace a dishwasher for a new one, it's depreciated and you can't claim the deduction straight away. If you were to repair, I guess, a section of the carpet because the tenant's dog has tried to bury a bone in the lounge room, then yes, you'd be able to claim that as a deduction immediately. All right. Now, one of the ones that I guess is that happens often, and this is the one where we have the most arguments with the ATO about, and that's repainting a property. So whether that be the inside or the outside. Now, I guess in my experience, the ability to claim a deduction for repainting a property is kind of consistent with the length of time that you've had it, or if the repaint has occurred because of tenant damage. Now, it can cost a bit to repaint a house. There's a bit of an outlay. I know, I've just had mine recently repainted. Not that I would want to swap professions with them. They can keep that, so good on them. But having that deduction in a single year definitely helps. And the alternative is that it's a capital improvement and depreciated at 2.5% per year. So I know what I'd rather. So let's say you've had your property 5 to 10 years. I'd say that there's a good case to be made that a new coat of paint is a repair, particularly on the inside. In saying that, the ATO will tend to argue this fact. We recently had a client who had the rental property for 15 years and was denied deduction, immediate deduction as a repair, because when they advertised for a new tenant, the rental agent got a little bit excited in the advertising and said it had been newly renovated, but all they'd really done is add a new coat of paint, and that was enough for the ATO to say, well, it must be an improvement if you're calling it renovated. So one of the things to look out for, the ATO will try and, I guess, deny as much as possible. They're trying to fall down, I guess, on the aggressive side most of the time. So that kind of brings us towards, how does the ATO manage these items during an audit, and what can we do? So the ATO really emphasised the importance of keeping detailed receipts. So this includes invoices and any other documentation that you've got to help support your claim. So really, I guess it's important to remember that the onus is on you to prove the expense. So if you've got a repair, even if it's like plumbing or like a burst water pipe, make sure that the invoice that you're getting from your trades is quite detailed and kind of really steps out what you've got, particularly when it is for a repair rather than an improvement. The more information you can have, the better. Now, during an audit, the ATO will scrutinise basically every expense. They'll want to see those invoices, and they will request them. And if you can't provide them, they'll pretty much automatically provide denial of that. And they're being pretty picky about distinguishing between the repairs and the improvements. Obviously, from their point of view, if they can treat it as an improvement, then that's less tax back for you. And this is one of the, I guess, the hot areas at the moment with regards to the ATO. They're really sort of paying attention to these items, particularly the initial repairs that are made after a property's been purchased. So I guess they're sort of using their software to flag high repairs, particularly on properties that have only newly been rented out. So something to keep in mind, that those initial repairs are probably the number one thing that are catching most people out at the moment on new property. But I guess really, I guess the best thing you can do is get a good understanding of what repair versus improvement is. I guess speak to your accountant if you're in doubt. because you don't want to go through having to pay for the outlay and then not have that money coming back at tax time. Perfect. So hopefully that gives you a bit better clarification on what a repair versus improvement is. So this is really essential, I guess, to understand as you go through your investment property journey. So hopefully you can jump on next week too. Anthony will be back on to talk about CGT. And I guess later today too, we'll find out whether we are getting a bit of an interest rate cut. I'm not sure if it's a done deal yet. I'm not going to count my chickens before they hatch, but I reckon there's a pretty good chance that they'll go through. So thank you, everyone. Have a great Tuesday, and we'll talk to you next time. See you later.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at positivementor.com.au.